Hey, this is Chris Franco, and you are listening to Compound Money Quietly, the CMQ Investing Podcast. CMQ investors, welcome to the show. It's great to have you here. If someone offers you a way to make really easy money in the stock market, they are either stupid or they think that you're stupid. 12 months ago, I didn't have $1 in my bank account. I was living under a bridge, playing the skin flute just to get money for a meal. Then I learned about swing trading. Now I'm a millionaire, and I want to share all my secrets with you.
Is he talking to me?
That's right, dirtbag. 12 months ago, I was known for turning tricks.
Like a magician.
Sure, kind of. And now I'm going to turn you into a millionaire.
Good Lord, J. Escaper dude.
I've got a proven 6-step system for buying and selling stocks at the perfect time. What's a stock, you ask? Simple. It's a name of a company on your computer with a number next to it, and that number only goes up. As I said, either they're stupid or they think that you're stupid. And by the end of this episode, you will understand why. Let me share with you some key portions from one of my favorite Howard Marks memos, a memo that was inspired by and prominently features none other than Charlie Munger. The memo is titled, It's Not Easy. I'll include a link to the memo in the description of this podcast. The year is 2011. I was fortunate to have one of my occasional lunches with Charlie Munger. As it ended and I got up to go, he said something about investing that I keep going back to. Quote, "It's not supposed to be easy. Anyone who finds it easy is stupid." Stupid. As usual, Charlie packed a great deal of wisdom into just a few words. Let's take the first 6. It's not supposed to be easy. While it's pretty simple to achieve average results, it shouldn't be easy to make superior investments and earn outsized returns. John Kenneth Galbraith said something similar years ago, and I quote, "There's nothing reliable to be learned about making money. If there were, study would be intense and everyone with a positive IQ would be rich." End quote. What Charlie and Professor Galbraith meant is this. Everyone wants to make money, and especially to find the sure thing or silver bullet that will allow them to do it with commensurate risk. Thus, they work hard, searching for bargain securities and approaches that will give them an edge. They buy up the bargains and apply the approaches. The result is that the effort of these market participants tend to drive out opportunities for easy money. Securities become more fairly priced, and free lunches become harder to find. It makes no sense to think it would be otherwise. And what about the next 7 words? Anyone who finds it easy is stupid. It follows from the above that given how hard investors work to find special opportunities, and that their buying eliminates such prospects, people who think it can be easy overlook substantial nuance and complexity. Markets have a number of functions, one of which is to eliminate opportunities for excess returns. Okay, this next part of the memo, I've actually done a little bit of creative readjustment. I've changed the names that Howard Marks used to names of characters from the podcast. So let's listen. Connor, the overconfident investor, calls me and bids $10,000 for my car. Then Connor offers to sell it to Jimmy New York for $20,000.
I call it the best friend discount.
If Connor's lucky and we both say yes, he doubles his money overnight.
Big money, baby.
To put it simply, anyone who expects to make money easily trading cars this way either thinks A, Jimmy and I are idiots, or B, the market won't function in a way that enables us to know about the fair value of my car. If these conditions were met, it would be an inefficient market. But if Jimmy and I have access to market data on used car prices, Connor's chances of pulling off this deal are greatly reduced.
Jimmy, you're a little early for the test drive,
Yeah, well, you're right on time for your beating.
Oh.
In most markets, transparency tends to reveal and thus preclude obvious mispricings. In my view, this is a good part of the basis for Charlie's comment. Anyone who thinks it's easy to achieve unusual profits is overlooking the way markets operate. And they're also overlooking the fact that Jimmy New York is not someone that you want to mess around with.
I hope your car's bulletproof.
It's not a car, Jimmy. It's a Tesla.
Yeah, whatever.
This has been Compound Money Quietly, the CMQ Investing Podcast. My name is Chris Franco. Thank you for listening. We'll talk soon.